Well, good morning, everyone. Thomas Montgomery here. We get together most weekday mornings at this time, 8 o'clock Central, to talk about tools, tips, strategies, success stories. Our primary goal is to get together and talk about business funding. What do we need to do to qualify to receive business funding? Because it's not as simple as just saying, hey, I need money or I want money. What we know is you really have to qualify if you want business funding. And business funding operates much differently than consumer or personal funding. So, with today's discussion, we're actually rolling out and announcing the 4-week business funding program. We're very excited to discuss this and introduce this to each of you. So, 4weekfunding.com is the website for this new resource. Today is its inaugural day as we roll it out. On the right-hand side, this is what your new landing page is going to look like. If you're going to be an affiliate with us, then you will receive a landing page that looks like this, that has just a brief introduction, has the opportunity for anyone that is interested to fill out their first name, last name, mobile, email, and then it will send them a series of texts that's built around educating them and prompting them, helping them to get involved. So we're not going to spend as much time about that, other than I just wanted to make sure any of you who are current affiliates or considering becoming an affiliate, be sure that you get your new landing page. And of course, it's free. That is targeting the 4-week business funding program. So with that, let's go ahead and dig into what this is all about. The what, the why, the how. So we've certainly been active in working with small businesses and helping them get prepared for funding. But so often there's two issues that we're trying to overcome. Number one, a lot of times the typical small business owner, the entrepreneur, doesn't know what it takes to be fundable. They just want to jump to the end, to the outcome. I want funding. But it doesn't work like that. You have to have a fundable business. And that's exactly what is identified here at the top of the website. So what we're going to do is educate them of what it means to have a fundable business and then help them have it. So let's step back from an educational perspective first and identify what does it take to have a fundable business. Well, you can see that it's broken down into 4 blocks here. And of course, that's the way that we implement the program. It's set up as it's labeled a 4-week curriculum. So the first thing that we help individuals do that are in the 4-week funding program is create a business plan and concurrently obtain seed capital. So let's talk about both of those briefly. So as it states here, your business plan is the foundation of your business. It's a roadmap for how to structure, how to run, how to grow your new business. Your business plan will help you figure out how much money you'll need to start or grow your business. And we call that the use of funds. Seed capital is typical. We'll stop there. So before we go to seed capital. So from our experience working with hundreds, with thousands of small businesses, most of them do not have an adequate business plan. So when we talk about this, it's not just from an academic perspective of, oh, everyone should have a business plan. It's not a nice to have, it's a must have. We need to have a business plan that at the minimum describes to the reader, what does the business do? What do they want money for, and how much money? You would be shocked if you were a fly in the wall in so many of the conversations that we have with entrepreneurs. A lot of times they don't know. They're just like, as much money as I can get, or they'll just throw out a number. Well, that's not how business funding works. Maybe they're thinking about personal loans, but that's not what you and I do. So the business plan, we're going to nip it in the bud and address it immediately. Now, what's awesome about the way that we approach the business plan is we're using the same software that SBA advisors use. So the 3 of us that formed our model all came from the SBA, myself included. So we're literally using that high level, professional, but still easy to use business plan software. So that's going to allow us to really understand where are we going, what are we trying to accomplish, how much funding do we need. So we're going to do that in week one. Now, if what we have here is a 4-week process, let's say that someone needs funding right away. Well, it takes 4 weeks, as described, and I'll continue to describe, to go through the 4 topics. So that's where we're going to go ahead and help them get seed capital, often called first tranche financing. So if they want that, which they don't have to take, but if they want seed capital, that's where we jump back in here. So seed capital is typically used to support the planning of a business up to the point when the company starts to sell a product or a service. So when the company's pre-revenue, not creating cash flow, doesn't have bank deposits, seed capital is often desired. So that is week one. On the website, 4weekfunding.com, it does a good job, I think, of describing the what and then specifically the deliverable. So what's the deliverable in week one? We're going to help the client create a business plan and financial projections. And if desired, like I said, it's optional. If they don't want seed capital, we don't have to help them with that. Get seed capital for immediate funding. So that is week one, what we're going to do right away. So we're taking a very structured approach so we can complete it in 30 days. Any questions on week one, creating the business plan and seed capital? All right, well, Doug asked, what if they already have a business plan? And that's fine. If they have a business plan, we're going to ask them to submit it so we can review it. And if we believe that it's adequate to submit to the lenders, then that's fine. Then we'll use their business plan. We don't want to create more work than that's necessary. And I think Doug's point is, what if a person already has a client, a participant already has both of these, or has the plan and doesn't want seed capital? That's perfectly fine. We can advance forward. We can go even more quickly. But if they don't have these 2 items, that's what we want to focus on in the first week of securing, because the other steps build off of that. Everyone good with what we're going to do in week one of this 4-week curriculum? Great. So then we get over to week 2. What we commonly are seeing are entrepreneurs that are coming in that want funding, but they don't really have the infrastructure of a fundable business. For instance, yesterday I was traveling on business over the weekend, but I was talking to a lady out of Mississippi, and she is in the, I guess we'll say, sports industry, and she has a business entity that's been around for a couple years, just over 2 years, but it's never made any profit. It's never had any sales. It's still pre-revenue after 2 years. So the point here is we will create a new entity for the client's capital raise if they want and if they need. But this is often more relevant than what you may first think, because even though, like, the client yesterday already had an entity, the entity that she had is not very fundable, right? So when we have these entities that haven't filed tax returns, haven't turned a profit, they don't look good on paper. So if that's the case, we're probably better off to form a new entity that doesn't have to explain away why it's never made a profit. So if a client comes and they already have an entity, we can look at that, and that's fine if they have a fundable entity. But since we're on the hook here to drive people through this process and get them funding, we're going to have a very candid discussion with them as we look at their current entity and decide, is it fundable, or are we better off to hit the reset button? Now, furthermore, before we file the entity, so I know I'm going in reverse order, we have to have a good business address. And I see so many entrepreneurs that either don't know that or they want to dismiss that. So they're using a home address, a residential address, or equally as bad, one of those shared office addresses. As we've talked about in other trainings, you need to have a unique business address to be able to get larger business loans, because typically the lender is going to place a UCC lien against the assets of the business, and they have to have a unique address to do that. So week one over here, we've got the plan in place and put some money in the participant's pocket. Now in week two, we're going to provide the address and get the entity filed. And we pay for that, of course. So let's read the description. A unique business address is required for most types of business funding, which we've discussed. Your business location is one of the most important decisions that you'll make, as it impacts your access to geographic specific stimulus funding. So what do I mean by that? There are different lenders, lots of different business lenders, as well as different types of funding, loans, lines of credit, and so forth. Not all of them are national. Some of them are regional, some are state specific, some are even a narrower geographic footprint. So where we form our business, as well as business taxation, makes a lot of sense. So for us to expedite this, because what you can see from this is we're trying to knock out the essential elements very quickly in 4 weeks. So if it's going to be done in 4 weeks, we need to be able to snap, 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 and move quickly. So we'll provide an address at no cost to the participant, and we'll file the entity formation with the Secretary of State at no cost to the participant. That's free. And I should have mentioned, so we create the business plan for free. We provide the business address for free. This is a grant subsidized program through a 501c3 nonprofit. We're going to file the entity for free. And so that deliverable is summarized here in bold. We'll provide you a unique business address and then file for the formation of your business. And then, of course, we get the EIN afterwards. Some people will get the order wrong. Some people have an EIN but no entity. That doesn't make sense. That's like having a social security number for a future child. We need to have the child first, then we get a social security number. We need to form the business, then get an EIN, and then, of course, open a bank account. So here's the first 2 weeks. So we're moving quickly. Any questions anyone has on the first 2 weeks of what we're going to do in the 4-week program? And again, I'll tie this together for those of you who are affiliates or want to be an affiliate, to make sure you understand how you're compensated, how this fits in. I'm going to get to that in a minute. Okay, so I think we're on a roll here. So let's move on to week 3. So often what we see when clients come to us is they want an amount of funding that they don't qualify for. So they want something that's beyond their qualifications. Well, of course, throughout this process, we're working on making them look legally and ethically more credible on paper. You know, everything from the business plan and the address and the good entity. But also what's important is collateral. Collateral, if you don't understand what that word means, it's essentially what we pledge to the lender that in case of default, that they're able to use to mitigate their risk. So collateral. So that's what we're providing. We're actually transferring collateral to the participant. And so here in the bold, we can understand the deliverable. We'll provide you $10,000 of collateral to strengthen your financial statements and to pledge as collateral. So then that takes us to week 4. We need to move quick, right? Snap, 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 move through these steps. So in week 4, loan packaging. This is a popular term used in the industry, but maybe you're not familiar with it. So essentially, loan packaging is pulling together the documents so they're organized and ready to present to the lender. And that includes everything from the business plan that we've already worked on up here, and also includes things like your balance sheet. So many small business owners do not have financials. Now, financials fit into 2 categories of time. We have our historical financials, what we've done up in the past and up to today, and then we have future projections. Well, the future projections we're going to cover up here. Financial projections are part of our business plan. But when we're talking about our historical financials, those are needed. Now, again, historical comes up to today, and then starting tomorrow is our projections. So you might say, well, this doesn't make sense, Tom. If it's a brand new business, they wouldn't have a balance sheet. That's incredibly wrong because a balance sheet doesn't reflect income or expenses. A business could be pre-revenue. Every business should have a balance sheet. And if the balance sheet doesn't look strong on paper, that's a significant barrier to getting funding. So, to no surprise, we're going to help the client build a balance sheet. And one of the things that makes that balance sheet stronger, of course, is the collateral transfer that happened over here. So the deliverable is we'll help you assemble the standard set of documents needed for business loan approval. So these are the 4 steps in the 4 weeks that we're taking clients through if they don't have a fundable business already. If you're one of our affiliates, one of our distribution partners, you have access to a new landing page like I just showed you, and then you're paid up front every time someone enrolls in the 4-week funding program. So they would come through your landing page, which I showed you at the beginning, then they would end up here, and then on the green bar, that's going to open up and bring up a contract so they can enroll right from the website. So they have a little introduction and then the agreement. So with that being said, we have separated the 4 weeks from the actual funding process, which is here. And it says optional. Now you might look at that and say, well, why in the world would that be optional, right? Maybe, well, why would we want to go through the work of the 4 weeks to create a fundable business if we don't want to move forward to funding? Well, here's specifically the reason. We get a lot of referrals from professionals that are in the lending marketplace. So what we're doing is creating the ability for people that have their own funding programs to refer their clients that are not fundable to us. We can help them create a fundable business, and then the client can go back to the referral partner to get funding. Because there's a lot of people out there that are loan brokers or involved in the lending marketplace. So we've separated so people could come just through the 4 weeks, or they could come through the 4-week program and then proceed with our help in getting funding. So we've developed it specifically as a separate step so people can do the technical advising, we call it, the 4 weeks, and then decide if they want to go to funding with us or not. And as it states here, selecting the right lender based upon your mitigating circumstances is crucial. So there's not just one lender we go to. We need to look at what? We need to look at the business plan. How much capital does the client need? What are they going to use it for? Where is their business based? What is their type of business? Do they have collateral? And so, how do their financials look? So those things go into determining which lender we're going to recommend to apply to. So we have a new proprietary lender match system. So new and improved, rolling out today, just like the 4-week program is. It is using AI technology that's provided by one of our strategic partners. So we're able to identify the lender and the funding program most likely to result in an approval with the best lending terms. At this point, we're going up to 5 million. Theoretically, it could go above 5 million, but it gets much more difficult for funding above 5 million. Then at the bottom of the page, we have a simple summary of deliverables. So this is what the people get. They get a free business plan. And so we said that here. And if we go to the agreement, let's go down to the exhibit. Let's make sure everything matches, right? Because we want to be honest. We want to have integrity. We want to be transparent. So business plan, free, says here. And it says free here. So we're good. It's matching. If they want that initial round of capital, the seed funding or first tranche, as we used to call it, we help them with that. Free unique business address. So we said we're going to provide them a business address. Does it cost them? No, it's free. It says it's free here, and it's free number 3. We're going to file with the Secretary of State to make sure that they have an entity that's fundable. We say it's free here, and it's listed up here, and then it's free on number 4. So everything is matching up. We're going to do the collateral transfer, the loan packaging, which is number 4. Free, it says here. Is it free over here? Yep, free over here. So everything's matching up. And then there's information about the 501c3 that we're working with. The 501c3 is called 509 Pacific. All right, so let's dig into the questions, comments, concerns that you have, and then one other point I need to cover, and then we'll get into your questions. For any of you that want to be involved with financial literacy and essentially getting paid to help others, there's going to be 2 options now. If you're already an affiliate, great. All we have is an addendum, didn't cost anything. It just means that we agree to pay you for referring people in. We promise to provide you a free landing page like I showed you at the beginning. So it's not a cost. There's no production requirements. There's no strings attached. So affiliates are able to offer this, and this is great because we've had a number of our affiliates say, hey, I need to be paid. They want to be paid up front. They don't want to just wait until after a client's capital raise. So you can still get paid under the funding proposal model. No one's taking anything away. But in addition to that, if any of the people you're referring in or talking to don't have a fundable business and would benefit from this, they can enroll in this, and then you get paid up front. So that's the first role. The second role is that we had a number of you that asked, like Phyllis. Is Phyllis on here? Yep, Phyllis is on. So a number of you have asked for a more of a white label approach where you can go out to the marketplace under your own branding and control your own pricing. So we are launching that today. So you can stay as if you are an affiliate, you can stay as an affiliate. And if you would rather have more control like Phyllis, so you want to go out under your own branding, not under our branding, have more control over the client experience, and also have your own pricing, then you can be a white label partner. So like in Phyllis's case, so with Phyllis, she is the only one that talks to her clients. So these services are still provided, but we interface with Phyllis, and Phyllis unilaterally communicates with her clients. So we can set it up to that extreme if you want. Now, for full transparency, let's take our business plan software. We have a vendor that we buy licenses from for the business plan, which you would expect. So there's parts of this that we have to buy, and we pay for from the grant. Didn't cost anything. Remember, as we said, for instance, the business plan is free. The point that I'm making is that 509 Pacific is a 501c3 nonprofit organization. You would want to be transparent with your client, even if you're a white label partner, and say, hey, we have some vendors that are helping us with some parts of the process. So hopefully that makes sense. All right, Bernard asked a good question. Does this replace the startup program? No, the startup program continues. The problem with the startup program is it has a higher price point, and some people were struggling with that. So the startup program will continue, but we didn't have the ability to get the price down to a lower level where anyone could afford it. So the startup program, if any of you are familiar with it, you have access to that, but the affiliates didn't have access to the startup program like you, Mr. Barching. So this is a resource that can be offered by the affiliates using the landing page that I showed you at the beginning of the presentation. And so this is the resource for the affiliates. If you want to be white label partner, you can be white label partner. That puts you in a position of more control, and you control the branding. So as far as next steps, if you want to be a participant, you're looking for funding, then if you feel that this could help you have a more fundable business based upon what we've discussed, you can go to 4weekfunding.com and click right here, and it'll bring up the form stack so we can get you plugged in. If you want to be a distribution partner, then we can certainly help you do that. We have what we call the affiliate program. With the affiliate program, we'll have you sign the addendum, and then you'll have a landing page so you're able to market this. So yes, David's asking. So if you are an affiliate, you should be working with Charlotte, your affiliate manager. You can let her know that you want to do the new campaign, and then she'll help you get set up, and there's no cost for that. But the bottom line is a lot of small businesses want funding that they don't qualify for. So we wanted to provide a solution that addressed the most frequent issues, barriers, missing pieces, if you will, that the typical small business owner doesn't have. Most of them don't have a business plan. Many of them need initial seed capital. Most of them don't have a true credible address. Many of them have an entity that's really not very fundable. Many of them have a collateral shortfall, and most of them do not have the documentation, for instance, like the balance sheet. So we've packaged this together to be able to provide it in a concise package that is implemented very quickly in less than a month. But it's still separate from the funding itself. So you might have someone that's enrolled in the funding proposal. You could bring this in as step 2, or conversely, people could come into this first, step 1, and then if they decide that they want help with funding, then we could help them and make funding step 2. It can go in either order. But we heard the plea from a number of our affiliates that said, the funding proposal's great, no upfront cost to the client's wonderful, but until the clients start getting funding, then the affiliate's not paid. And many of the affiliates said, no, need money sooner. And so this provides the ability to get paid upfront rather than waiting, but you're not giving it up. You can have both. You can be paid upfront by clients enrolling in this. And then secondly, you can also be paid after the client has their capital raise. And I had the landing page. So for those of you that missed it, here's an example. Well, not an example. It's the template for the new landing page that we would provide you for free if you're an affiliate. So it says 4-week business funding program. Our 501c3 nonprofit has received a grant to assist entrepreneurs in creating a fundable business in less than a month using a proven, legal, and reliable process broken down into 4 weekly steps. Please complete the form below. So the form is similar. They check this. They hit the button, and then it's going to send them a text. They're going to respond yes to opt into the text communication. And we have a really good drip sequence that drips to them over several days. And it's not just trying to sell them, it's actually educating them. Hey, what is week 1 about? Why is this important? What's week 2 about? Why is it important? Same for 3 and 4. So it really fits the mission that we have to improve financial literacy, as well as help people have the resources that they need. But so while we do have the grant allocation, as Annette's asking, so this is not free. Don't interpret it as free. I didn't mean to say it's free. Are there a bunch of things that come free? Absolutely. On Exhibit E, all these parts are free. So that's true. But the program itself is not free for 2 reasons. The grant doesn't cover all of it, so there is a contribution by the participant. And then secondly, if it were free, then you wouldn't get paid anything. So after the grant allocation, the participant's paying $1,000 to go through the 4-week funding program, and you're paid out of that. So it's $1,000. Annette's question was, how much is the 4-week funding program? So how much is it worth? Well, it's obviously worth at least 10,000 because we're transferring 10,000 of collateral, but that's all marketing and I'm not trying to market to you. So the value is 10,000 or more, but what they're paying is a flat $1,000 fee. So that $1,000 is paid at the time of enrollment. Then we work with them through the 4-week process. You're paid after they enroll. And then also if they opt into the funding process, which we anticipate nearly everyone will, because that's the whole point of going through the 4-week curriculum, then you'll be paid 5% of each client's capital raise. Any other questions, comments, concerns? So what we've been able to do is package together what we're finding most clients need, made it very, very affordable, $1,000. I don't think anyone would question the value proposition for all that they're getting. And then it positions them to go to funding, and then they can use our, meaning your or mine, they can use our resource to go to funding, or they don't have to. We really want to attract referrals from the thousands of other people that are out in the lending space, because the typical loan broker takes a prospect, and if the person's fundable, they get them funded, but if not, they discard them. Well, for any of you that are affiliates, you probably want to reach out to loan brokers and educate them about what we're doing and have them refer to you their declines. And then we can take the people that they weren't able to help and then be able to take them through a 4-week curriculum and then get them back to the referral partner. The referral partner can then handle the funding, but you've been able to help that client become fundable. So this is the fundability building 4-part process. Then they go to funding with the understanding that we can certainly help them get upfront seed capital. The upfront seed capital is not contingent upon having a fundable business, because obviously we've not gone through to build a fundable business. Michael's asking what the minimum is. There's no minimum. All right, so hopefully this is helpful. 4weekfunding.com. If you want to go view, there's a little video here that's a short, I think it's 5 or 6 minutes, that describes it from the client's perspective. You can review this information. If you want to participate, you hit the green bar and it pops up. And then let's go back up to the top. It's going to bring up a form stack that says 4-week business funding program. It again reiterates what we do, has you initial here, and we're able to get you plugged in. We have the referral program, which you can either be an affiliate and get paid to refer, or you could even be a white label partner if you want. The benefit of the white label partner is everything's under your branding, your labeling, your colors, your name. You control the client pricing and the client experience. All right, with that being said, if you have any questions, let us know. But I hope that you're as excited about this as I am, because again, in closing, there are many, many, many entrepreneurs, small business owners that want and need funding, but frankly, most of them don't have a fundable business. And this is a very affordable, very concise way of creating a fundable business. All right, Leonard's asking, could we do this for free by making it refundable? That's a great point, Leonard, and that's what we see a number of you planning to do. So while there is a $1,000 cost to go through this to create a fundable business, which is a great value, yes, Leonard, I think a number of you are crediting that back. So then if they use the funding program, which you already are plugged into most likely, you know that you're getting paid 5% if you're an affiliate, unlimited percent if you're a white label partner. So then many of you are planning to credit back the $1,000 that they spent after they go through funding. So that way, essentially, we're doing all of this for free. All right, well, let us know if you have any questions, comments, concerns. We'll see you back tomorrow morning. Have a great day. Bye-bye.